A high price of 32,000 Bitcoin option show some pro traders expect more upside. 32,000 per Bitcoin seemed unreasonable in October, but the 950% spike in January call option suggests some traders think it's a possibility.
You see these little red boxes? They mean the price is going down. I'm going to tell you a little secret about these red boxes. They do not mean a damn thing, okay? Without you, they're like worthless hunks of plastic. Like a loaded M16 without a trained Marine to pull the trigger. And in the case of these things, it's up to each and every one of you, my highly trained coiners, my hodlers who will not sell no matter how much it dips, my damn warriors, who will hold every cent until we see those boxes go to the moon!
Fiat is collapsing. Fiat is... Wait. I don't feel comfortable doing this. How much am I getting paid to do this again? Make it $2 and we have a deal. Okay.
The buying of fiat currencies has been shown to have extreme volatility historically, despite being backed by the law, police, armies. Fiat is still used for an insane amount of money laundering each year and is the primary choice of compensation for other illicit activities. It has an increasingly unfair distribution model, subject to rampant fractional reserve lending. You are liable to be physically robbed of it.
Let's get on with the show. A month ago, one would be hard-pressed to find any investor who would have expected a $32,000 Bitcoin price in January. At the time, a 140% upside was needed from the $13,300 price on October 30th, and this seemed quite far-fetched. Therefore, the January 32,000 Bitcoin call buy option traded at Deribit for a meager $67 or 0.005 BTC in late October. Fast forward now, and the same call option peaked at $705. That's almost 10x gain in less than 4 weeks. Keep in mind, despite the rally at $19,484, an additional 67% upside is still needed to reach $32,000. Albeit, the recent BTC price increase, the implied option probability, delta, currently sit at 11%. The call option price has also increased due to BTC volatility change that sellers will request a more substantial premium for taking the risk during uncertain markets. Intense price swings, regardless of the direction, will push volatility higher, and any unexpected news flow usually drive the indicator upward. Take notice of how BTC volatility spiked from 57% on October 30th to 78% this week. This event is notably bullish for call option buyers. And even if BTC price had stayed the same, the option price would have climbed accordingly. Don't take option probabilities literally. Option pricing is also heavy depending on how distant the expiry date is. The same $32,000 call might be deemed worthless 2 days ahead of maturity. Therefore, traders shouldn't fixate too much on implied option probability. By looking at the call and buy option for December 25th, an investor might infer that the 26% odds for $20,000 seem dim. After all, an 18% pump in a month seems unreasonable. Traders tend to have a short-term memory, but an 18% increase in 30 days happened in 9 of the past 12 months. The last time an 18% or even larger monthly pump happened was not so long ago. On August 23rd, Bitcoin closed at $11,645, which was a 22% increase from the previous month. Trader and investors should consider buying call option with longer expiry dates. Those who were brave enough to bet on a 150% Bitcoin price increase a month ago are extremely satisfied with the result.